Well, for those calling in from Asia and all those in the States, thank you. I know that from the title, I'm going to sound like a Homer, hometown fan, but for reasons I'll cover, we see the U.S. continuing its leadership role, even with all the problems we have, as we think the problems elsewhere are quite high and continue to get worse, actually, in most places. Mary, those who remember the Queen of the Internet, Mary Meeker, I saw this quote and it summed up our views quite well of what's going on in the world today and in the U.S. China certainly has its share of problems, and they're taking steps to address them. Although the frustrations of the population is growing. Mark, I saw today that the youth unemployment hit a record again, second month in a row, but
In China?
up in China, up over even after the revised numbers. Europe continues to have its problems as well, and particularly highlighted by Germany and the manufacturing struggles that they have. And, Mario Draghi came out with a report to address that. But we see the U.S. as the best risk-reward opportunity, given that even with the current state of politics, the debt levels, the deficit, and global conflicts. I think there's a couple reasons for that. One is, and this just looks at GDP growth going back for the post-World War II period in the U.S., but look at the move just from 21 up. We've moved from 23 trillion to $28.6 trillion. So a 25% increase over the last couple of years. And that's without the benefit of most of the stimulus that the government's put out from the required spending and legislated spending that they announced over the last couple of years. And that's been supported by the state and local governments, but also by corporations, because corporate profits grew from 3.2 trillion to 3.8 trillion during that time. So an 18% increase in 3 years in U.S. corporate profits, even before much of the legislated spending is hit. And while there's been announcements of delays and things like that, we think things are going to continue to keep coming through. Just to give you a sense of the power of focused public investment, these are all the projects that public investments are involved in the U.S. over the last couple of years. This is what is backed by private investment. And to put the private investment into perspective, we had for the public investment, we had the Jobs Act, we had the Inflation Reduction Act, we had the CHIPS and Science Act, and then we had the National Defense Authorization Act. Those put trillions of dollars into the system, but they're being backed by the private sector. And to put this in perspective, Eaton Corp, which is a leading electrical and industrial products manufacturer in the U.S., said that in 2022, there were 31 mega projects totaling $103 billion in the U.S. Today, there are 440 mega projects with a combined value of $1.4 trillion, double the number from last year. So we're seeing that continue to go. And despite the reports of delays, they're not expecting a slowdown in their projects. And in fact, Eaton's noted that only 15% of the mega projects have begun, and they've secured over $1.4 billion in orders already, with another 1.3 in negotiations. So you're seeing real flow through from this. And then it's a tough area to compete with the amount of investment. And look at this quote. Let this quote from Larry Ellison sink in. He was speaking last week about the data centers and the spend there. And he believes that a data center is going to cost, or a data center, gigawatt data center, or a mega gigawatt data center is going to cost minimum of $100 billion that you have to start spending now and have complete in the next 4 years. So he believes there's only a handful of companies and countries that will be able to compete in this area. And when you look at the spending, just this is the quarterly spending of Microsoft, Meta, Amazon, and Alphabet. And it's ranging at about over 50 billion a quarter right now. Very hard for most companies to compete with this, particularly when you think about the debt burdens that many companies are carrying. So to us, this means that the big get bigger and the rich get richer. To put it in perspective a little different way, this shows you the dominance of U.S. companies in the markets, and each of these three lines represents $1 trillion. So 1 trillion, 2 trillion, 3 trillion. You get the size of the scale. You also get the sense of U.S. Leadership here. And then compare it to Europe, which has a number of great companies, Novo Nordisk and ASML and Nestle and SAP, Roche, very good in the healthcare area. But even with that, the scale just isn't comparable. Except in Novo Nordisk's case, I think the risk that they pose to their country would make them deemed a systemically important business right now and a risk to the economy, because if they have a significant pullback, so much of the economy is dependent on that. So you get a sense of how different the scale is of what the U.S. is looking at. So just closing thoughts quickly, Mark. The U.S. and the world economies have lots of challenges. We have economic ones, we have social ones, and political ones. That said, I think the U.S. is the best major economy. We were just talking a minute ago before the call started about some of the nations that are benefiting in Asia that will continue to benefit. Indonesia, Malaysia, Vietnam, some of those countries are benefiting from the reindustrialization that's going on. But the global fragmentation is real. It's going to be costly. I think cost of living remains a key issue, as does the ever-present challenge of the climate transition, as well as how does generative AI actually get implemented and work. I think we have debt and deficits are real concerns, but the near-term focus is on avoiding a recession. The Fed took steps to do that with a 50 basis point move. Highly unusual. We've only had 3 50 basis point moves in a period like this. And in most cases, in the other 2 cases, it was not when we were not in a recession. So I think this is a very highly unusual time. I suspect the market is ahead of themselves. But if the Fed is as aggressive as the market thinks in terms of rate cuts, I think we could move to a very quick short-term move up that would probably be not good for the economy or for the markets because it would lead to a meltdown after. But I think if the Fed is a little bit more guarded and measured in their future cuts, that we will be able to have a soft landing, continue to move forward. And if that is the case, then we would focus on these areas of energy, technology, healthcare, defense, materials, and industrials. We think these are the areas that will do well. I think there are opportunities in finance and financials. I'm not sure the long end is going to come down as much as everyone would like to give the banks the lift they need for net interest margin. I think they also need to get back into the lending game a little bit more aggressively. And they might not be able to get the same margins that everyone's anticipating from massive rate cuts. But we do like some of the other financial services companies in the financials area as well. So, Mark, I'm going to stop there and open it up for comments and discussion.
Well, that was the fastest briefing you've ever done.
I know, and I'm getting ready for the 11 o'clock so you can get to the Kim Draper. And
yeah, fair enough. For those, yeah, anyone in New York, we're going to meet in person at Stephen's office is where he's located. But any questions or thoughts, questions, ideas, different opinions? Does this sound right to you, John, or Mike, or Fred?
Yeah, I actually have a question, if it's okay.
Yeah, good.
Yeah, very interesting, very, very compelling story about US. But you mentioned, of course, imbalances and difficulties with that. So liquidity is the key factor to support the market, I understand. If you could uncover that, do you expect that Federal Reserve Bank will sort of come back with new policies or some stimulus in terms of liquidity? Thank you.
I think they're gonna focus on trying to bring their balance sheet down, but not as much as they would like to. I think the quantitative tightening will be a challenge for them to keep going at the same level that they are, and I think they'll use that lever to deal with the liquidity issue. But I think they also need to get to some level of normalization. And I think the market's going to need time to adjust their mindset to that, because we've had 15 years of no fiscal or monetary discipline to speak of. And I think we all have to, as investors, adjust to the fact that the Fed's more concerned about the economy than they are about the markets. They are concerned about the markets because it gives the consumers confidence, but I think they want to see normalization and they want to move off of life support. So I think that that'll be the lever that they pull, is how they manage the issuance of treasuries and also how they manage the quantitative tightening down. I do think that is one of the keys, though, is people don't appreciate exactly how much distortions were created by fiscal and monetary policy over the last 15 years. And coming out of that, I don't think we're as concerned as we need to be about the liquidity overall, even today, even after the experiences we've had in private investments lately.
Yeah, thank you. Because it appears to be a very significant issue to manage that debt, and the same ambitious of politicians to maintain this growth, right? Because the growth is amazing, but how you maintain without leverage?
Yeah, and it's an interesting idea, and I think that's the one problem that holds us back from being more aggressive on our longer term views, is the policies of both candidates are not classic textbook economic policies to get growth. Would be a generous way of commenting on it. So I would leave it at that without getting too political. But that is a concern. Neither one of them have focused on any of the long-term real drivers of debt, like Social Security and Medicare costs. Their attempts to deal with the deficit are non-existent in their plans. And so it's a problem that we have to worry about. You have to have innovation and productivity really ramp up, and you have to get immigration right to deal with the problems that we have.
Other comments, questions?
It's interesting, though. I think the imperfect neighborhood is really the key, is capital will flow to where they see the highest rate of returns. And that is relative to other opportunities. And I think when you look at major economies, the risks there are growing in, and when we get to the emerging economies emerge, I think that's been an issue. It remains an issue. Can they break out of the trap? I think there's issues growing in China that you're starting to see a lot more social concerns. There was interesting articles today and the last couple of days about the high cost of being the richest man in China. It's not a label you want. It's a bullseye on you. And so is that the kind of mindset that gets an economy the kind of economic growth it needs, is a question.
Other comments or questions? I was going to point out to everybody that's new to that every week we do this, not every time at 8 a.m., but we have a playlist of all of these briefings. And if you went back, I have so many things going on, I got to find where the briefings are. But we have a brief. Last week was on the middle income countries. Yeah, right here. I'll put it in the chat.
Mark, I want to ask a simple question. I mean, I missed the presentation, but I mean, in this imperfect neighborhood, who's the winner and who loses? I mean, just trying to understand. And if the neighborhood were perfect, who wins and who loses? Or is that not a good question?
No, I understand your question, Joel. I was actually talking more about it economically. I think I don't think anyone wins the way we're going, at the path we're going down. unless the US and China can get their collective act together to not destroy the economic growth that's going on in the world. I think it's going to be very difficult if we go to a bifurcated system to not have everyone lose. So I would say that the way I look at it right now is the innovators win, which would be the US and China as the dominant innovators, and everyone else will be kind of left to figure out how they play the game. You either need resources or you need innovation. And I'm not sure the resources one wins in the long term either right now.
Well, I'm tempted to switch over to you, Sridhar, because you've been at these because I want to get the Asian view here, as we have others from the region on. You had just come from a couple of these summits, and you were giving me note-taking takeaways, and I was like, well, we should have you come and share these. So here we are.
Right. Okay. Thanks, Mark. I think some interesting observations and comments and as to who wins and who loses and where the world is heading. So we'll start with one of the important topics that was discussed was the current state of geopolitics and fragmentalism that has kind of crept into the world order, and the consensus-based approach has taken a back seat. We had U.S. ambassador, we had ministers from Asian region, we had the Singapore minister, we had a EU representative, etc. Very clearly, I think that the world has lost the notion of a consensus-based approach, and a new terminology is emerging or emerged. It's called as the mini-lateralism, which is effectively like-minded countries coming together to try to solve problems, which cuts out bureaucracy and which cuts out nuances of dissent. They said, Quad is an example. Then, IPEF, Indo-Pacific Economic Forum is an example. BRICS is another example. And why ASEAN is working, because it's in this region, is working well relative to some of the challenges that are prevalent within the ASEAN region. ASEAN claims that, which is true, that they received one of the highest allocations of FDI into the region in terms of driving growth. So what is driving all this is this what we call mini-lateralism, like-minded countries coming together and trying to cut through and get a resolution. Will it solve a global problem? The answer is no. Now, the one thing that comes out, depending on which part of the world you come from, they say that China is the big Godzilla and China is left out of most of these forums. And with China being out, Russia was never discussed, but China was discussed. And with China being out of these forums, how can you even develop a kind of a like-minded approach? So this is why the mini-lateralism has emerged. Then the other question that came up in the same topic is there an opportunity for, within the context of the US elections, given the two candidates, is there an opportunity for change of status quo, and will China be brought into the focus? The answer, some views, especially from ASEAN, is that should Harris become the president, they believe that there is probably an opportunity for a more amicable resolution to China. Whereas in the case, if should Trump win, I think we'll see more mini-lateralism and isolation of China, which will threaten in terms of the global order. So this is the kind of the gist of the discussions around the global threats and why a lack of consensus-based approach is going to hurt many of the issues, such as climate change, such as resolving should there be a next pandemic, capital flows, capital allocation, etc. So this is the gist of the topics, gist of the discussions around this first topic, which is namely the complex geopolitics and the fragmentation of the world. This led to, sorry, I'll break.
Should we pause for a second?
Yeah.
Any thoughts, questions on that? Theme one? Joel, you sound like you want to say
Yeah,
something.
I just this idea of mini-lateralism, it's mini, right? M-I-N-I.
Yeah.
Yeah, okay. Seems like it again, it seems like a good thing, but not necessarily because of the broader impact of lack of consensus, but sounds like a way for countries to kind of innovate in this space in a sense and find ways to find mini agreements, like you say, that I'm hoping can lead to better outcomes. But just to comment, I don't know if there's a question there, just trying to frame it in my mind. It's not necessarily good or bad, it just is. I'll stop there.
Yeah. I think, John, it's a good example of India-Russia accord on the security, India-US accord on technology, space, capital flows, etc. India-France, UK accord on some of the defense, United States, UAE, Israel, and India on the kind of the economic corridor that they're building. They're all examples that they pointed out where things are getting done, but things are getting done within the parameter of how it helps those countries and the issues that they are dealing with, cutting through bureaucracy rather than a consensus-based approach, which is absent. So that led to the big question around markets and allocation, capital allocations. Ray Dalio led the discussion on this topic. He said that there are 5 important themes that are going to impact as we look ahead, creating uncertainties around how you allocate capital and manage. The first thing that he pointed out was the US debt and the consequences of the US debt into the broader economic question. And he said the interest payments are today, around 1.03, expected to cross $1.3 trillion in the US balance sheet. That certainly has implications in terms of, the world looking at United States and saying, is there some kind of a disaster looming as a result of this, outgrowing debt, which is not in control. He said that's the first theme. And obviously the second theme was around interest rate. At that point of time, we had not received 50 basis points. We got the 50 basis points. And then, that's you're seeing some impact as a result of that. And even there, he said, some countries which are exporting countries, some countries which are importing countries have to deal with the imbalances with a major 50 basis point cut. And how the economies deal with it is a question mark. His second point was around economic cycles and its impact. He says the economic cycles have become less predictable, notwithstanding the fact we are beginning to see some growth because of all the geopolitical tensions, and there is no kind of seamless flow of capital. For example, China was pointed out. China has lost significant amount of FDI, and factories are relocating. So he says that there's a potential impact, and how the capital gets allocated needs to be factored in, within the context of this economic cycle and changes taking place in the world. The third that he pointed out is what we dealt with is COVID, acts of nature, which is namely, we don't know what's around the corner, okay? Huge balance sheet implications and economic contraction. So what's the next looming pandemic that is there? Or the climate, the implications of lack of control on climate, whether that will cascade its way into some act of nature, which the world has not factored in as to how to deal with. Bleeding with debt on the balance sheets. So therefore, that's the third unknown in the uncertainty in terms of allocation of capital. Now, the fourth that he pointed out was what he called as great conflicts. That is, there are multiple conflicts that are going on, Russia, Ukraine, what we are seeing in West Asia, but most notably the South China tensions that are prevalent in this region, notably the China-US conflict around Taiwan, and the China conflict with the ASEAN nations, especially around the South China Sea territorial disputes. And how those is there a flashpoint that can trigger a major problem, because you have Japan, you have China, you have India, and you have ASEAN, major economic states prevalent in the region. So he said, there could be, if there is a flashpoint, then how the world will deal with it in the absence of all people sitting and discussing how to resolve a conflict. He pointed out Russia, Ukraine, there's no consensus. There's nobody sitting around the table to discuss how to solve this problem. Then the last point that he alluded to was the whole impact of AI technology, and what does that mean, from a decision-making point of view. So he said these are the things that are causing uncertainties, and how fund managers and asset managers and investment managers deal with allocation of capital. The traditional norms of 60, 40, 70, 30, 75, 25, those norms have disappeared. And you need to be far more dynamic in terms of managing and allocating your capital. Is obviously, his point is, which is what, I also personally, 70% of the capital today is getting allocated to the United States, which is far more predictable in terms of the market dynamics. So that was his this theme flowed through into various sub-discussions or sub-sessions that took place. Also in Asia, they are looking now both public and private markets allocation more in an integrated manner rather than, separate buckets in terms of, I have a pool of capital in public markets and I have a pool of capital in private markets. I'll do them separately. That is collapsing, at least in this particular region. This is the other theme that came out. So this is on the, at a high level, the markets and allocations led by Ray, and then by many people who were there, including TPG and so on.
Well, you've covered a lot of ground, Sridhar. Thoughts, questions?
Hi, good morning. Just one question to Sridhar pertaining to something he mentioned earlier regarding all of the different deals that India has been doing. And by the way, Sridhar, thank you very much for the wonderful commentary. I think the question I'd like to ask is, do you think the mini-lateralism could be disguised for opportunistic neutrality? In other words, right, it doesn't seem like there's, and obviously we're using India here as an example, but, obviously the same applies to countries like Saudi Arabia and others where, they really are looking at it and saying, well, if it's good economically, it works, right? Regardless of the geopolitical implications, right? So in the case of where you described India, India is working with Russia, they're working with China, they're working with the United States, they're working with sort of everyone.
They're also, by the way, Charles, working with Ukraine.
They are working with
through the Italians.
Right, exactly. And they're working with the Israelis and they're working with the Saudis and they're working with everybody, right? On all of these mini-lateral agreements. So the question is that it seems, there really isn't a politically unifying point on all of this, but it seems more opportunistic economically than it does politically. Just would love to get a perspective there.
I think, Charles, you hit the nail on the head, and which is namely, it is opportunistic. It cuts through the bureaucracy. It solves the specific problem. And they have successfully been able to negate any kind of adverse consequences emerging from that. To give a very good example, China did a deal signed an agreement with ASEAN on the regional cooperation for economic policies. RCEP deal has resulted in open corridor exports or imports by the ASEAN countries into ASEAN, creating a lot of social tensions in the industrial floors of these countries because the goods are coming at an abnormally cheap price. But the ASEAN is saying, okay, I've got economic challenge. I'll deal with the local unrest and move forward. So the question the question that you posed, is it opportunistic, which mitigates the rationale for a broad kind of WTO consensus-based approach, is absolutely spot on. These sentiments were echoed by the EU commissioner who was at the table. Said, because this global approach, consensus approach, is not working, because China is a big bulwark and is a problem, and so therefore now Russia too. So they're not there. So we're not going to have. In the meanwhile, people have to address their local problems and move forward. So is this going to be the future order? At least that's the message that's coming through. This is the new way forward, Charles.
So Mark, do you mind if I ask a follow-up or?
Sure, go ahead.
So question on that point. So then, certain administrations have been, I think you pointed out the difference between Harris and Trump. Do you think that there could be a possible penalty imposed by a subsequent U.S. administration for this type of behavior, I think is the question. And what do you think would be the implications of that?
I think it's a great question. At least one thing, one answer has come from one of the candidates, which is Trump. Anybody who is attempting to de-dollarize and move away from dollar trade will be punished, will face the consequences of tariffs and blockade. So he's clearly saying that you want to deal globally, you want to work with us, then you deal in dollar trade, and there's no question of de-dollarization. Would US go beyond and put sanctions and impose conditions? At least I don't see it.
Thank you.
All right.
Other questions? Mark or Sanan or Michael?
I'm sitting in Singapore in these regions. It's very interesting that you see the weakened dollars, and then you really see the Singapore dollars going stronger and the assets going more expensive. And similar trends in our neighbor more significant is Malaysia. The ringgit, you probably read the news. So my question is that likely a short-term trend? It's just people fear of a weakened dollars, or is it likely to continue as the Fed to cut more rates? Is there any comment on this?
Anyone? You're on mute, Stephen, if you're trying to.
Was the question, will the dollar continue to weaken if the Fed continues to cut rates?
Yeah, and then the assets probably will go to emerging market like ASEAN countries, Southeast Asia countries.
Yeah, I think it depends on your view of how aggressive the Fed's going to be in cutting rates. If they go with what the market's projecting, then I would suspect you would be correct. I doubt they'll get that far that fast. So I think the market's view is way too aggressive for how far the Fed can cut.
Thank you.
Well, what's your view, Mark?
I don't know, obviously. I got some bets of betting on the local markets, the sets. I would see the Fed is likely to. I think it's 50 BPS. It's 50-50 chance, and later eventually made that decision. And now it's suddenly more worried about the labor markets, and then we can't tell, but markets already react, and then it's likely. My view is that this trend will continue for a while.
Mm-hmm.
Yeah.
It would
I think
also be,
I tend to agree with the comments. The flow, the interest rates are not good unless there is a major catastrophic event. I believe the declining rate, which is likely, will weaken the dollar, and you will see the assets to moving towards opportunistic regions, which is right now Asia.
Well, by the way, we say Asia, but it's obviously segments of Asia.
Yes, I didn't want to deliberately exclude China, but I said, Asia is not, the other thing is China plus one is the other strategy. China plus one. So it's China minus.
I think it's really interesting when you make it a nuance excluding China, because you're excluding the number 2 economy that has been attracting the flows for 20 years. So I think it's a little less nuanced than what we just kind of described, because I think that is the big issue. That's when going back to where I said it really comes down to how the US and China act will determine a lot of it, because China's been such a dominant part of the flows, and they are experiencing outflows now, and I think that is significant.
That's the big both geopolitical question as well as markets and capital allocation question, Steve. That's the challenge, and how the question that's even being asked in at the forums is whether this window will be harnessed by nations such as Vietnam and Thailand and so on to gain access to the supply chain and be a player in the ecosystem, which were up until now compromised because of the reasons that you alluded to, which is strong flows, strong industrial base, whether now they are in a relatively different state compared to 10 years ago, notably countries like Vietnam and Thailand and so on, and India, for example, semiconductor movement to India, the auto sector movement to India,
let's talk about India for a second, right? Is this we've been waiting for the era of India, the decade of India. Are we here? And what could help it and what could hurt it?
Well, I think it's evolving is my point. I believe that they are now a 4.1 trillion nominal GDP economy. Very soon they will be 5 trillion. Believe it or not, Singapore is the #1 FDI donor or FDI investment vehicle into India. So there is moving capital.
But isn't that more of a transit vehicle?
No, it's not a transit vehicle. It's that it's a direct investment. Direct investment simply implies that it is going into the markets or going into industries from a joint venture point of view. So I think there was an agreement signed between the Indian Prime Minister and the new Chinese
By the
leader.
way, I think the Indian Prime Minister, he hugs every single head of state that he can meet right now, from Putin to Malaysia to all the rest, to Charles's point, the opportunistic hug.
Well, that's I don't whether he's hugging opportunistically or not is a different point. But I'm just trying to say that there is a clear flight out of China that's very visible, and Chinese are not stopping the geopolitical tensions and regional tensions. So therefore, how long that'll be sustained, we don't know. But whether Harris, clearly Trump's position is very well known as far as China is concerned. Whether Harris will change policies related to Biden, we don't know. Biden also has taken a very tough stance as far as China is concerned, but his tenure is only 3 months. Soon one of the new incumbents will take charge.
So do you think?
Sorry, can I ask another question?
Yes. Go ahead, Mike.
Yeah, thank you. Continuation with the debt and currency weakness in the US. There is a significant event, I understand, will be in October as a BRICS meeting, which will be I'm not sure what they're discussing specifically, but I understand they try to create alternative, whether you call it mini-lateralism or whatever. What's your view? Is it any possibility that there will be another alternative center trying to create alternative reserve currency through that BRICS?
No,
Thank you.
I just don't believe there's consensus between China, Russia, and India on what that is. That is why it remains an aspirational hope. It is opportunistic to circumvent sanctions. So I don't believe that's going to happen. And India is not going to have either a renminbi, neither ruble is a currency that would be the BRICS. There's not enough volume of trade for it to justify. It is just purely to avoid sanctions. This whole concept has evolved. One of the Indian ministers, I forget his name, Dr. Puri, who was former UN commissioner and UN head within the context of the Indian position, made it very clear, look, we have a significant amount of 75% of our reserves are in US dollars. We have a significant volume of trade in US dollars. We have significant FDI in US dollars. And we have more than 300 of the Fortune 500 companies located in India. So there's no question of an alternate currency. There may be bilateral currency trades, which is happening, which has not been very successful. But that's the only thing that will come out. So this whole BRICS is asymmetric. That is why there's no consensus. I don't see any currency unit emerging from there.
It's also very hard for an autocratic nation to have a reserve currency status. It would be like in the US, the 5 families of the mafia trying to agree who's going to run the organization and how they're going to share the goods. You don't have that trust that you need, and for all the problems the US has, the US dollar has, the scale and scope of and liquidity of the US capital market system is far beyond what the rest of the world has. So I think for some time, the US dollar reserve currency status is secure. I do agree that these side deals are a way to kind of ease some of the pressures short term, but they don't solve the problem for those nations.
Yeah, agree.
So what I'm gathering, Sridhar, is that India is playing this game of mini-lateralism. Is that what you're trying to express here? That they are trying to use this opportunistic neutrality, as Charles called it, to position themselves further up the food chain?
No, I'm not expressing. This is what has come out of the discussions that took place in the Asian summits. I'm just sharing what was discussed and the rationale. And I just pointed out some of the examples cited in the discussions. Well, there is also, Japan, Korea, China, a very big issue. There's no resolution. They're very big economies in Asia. Whereas Japan has a deal with US, Japan has a deal with India, Japan has a deal with Australia, Japan has a deal with UK. So the story is that they pointed all this to say that even the G7 nations have not come up with a consensus and consistent approach, to address the problems.
The whole post-World War II governing structure is under attack right now. It doesn't work for the world we live in today.
Yeah.
We've outgrown it and we haven't adjusted.
And I would
the
say
UN week is going on right now, and that's a prime example of one that the world's moved past and we have to adjust.
consensus rarely works in any situation I've found. Anyone striving for consensus is usually hamstrung in terms of being truly effective. And maybe that applies a bit here. I just think of Ian Bremmer and his whole G0 concept a few years ago. That's really coming true in this idea that it's so disparate and diffused as far as, geopolitical power right now. There is no true power broker in a sense, I guess.
No, there is no power broker. You are absolutely, spot on. There is no power broker. There is no global leadership. So it's what we are seeing is brinkmanship, and then people aligning around brinkmanship rather than leadership. Otherwise, we won't have, you know, four major kind of episodes in various theaters going on right now. And nobody, look at United Nations. Where is it? Nothing. It can't solve. Because there's no consensus. One veto, out of the window. Significant cost. Nobody talks about how much US has committed to that war. Significant amount of money that we don't have. Significant amount of money that we committed to some of the Middle East wars that we don't have. There is all playing into the debt of the US, which it's almost like we are on two parallel tracks. One is the government, and the second is the markets. You know, when will they intersect and have some consequences is the question that Ray Dalio was kind of posing, which is to say, and how will that cascade into the rest of the markets? Which he then kind of led the strategy to say, you can't use market allocation, capital allocation in a traditional model in today's uncertain world.
Well, I think you pointed out something, Sridhar, which I think is a very key point here. Is there at one point there was no delineation between politics and capital, and I think what we're now seeing is that people are saying we don't really care about the politics. What we really care about is the capital. And so I think in this particular case, right, to go back to my original point about opportunistic neutrality, right, the concerns around that U.S. foreign policy might have may end up being taken as a backseat concern rather than a primary concern.
Yeah, I agree with you, Charles. I agree. I think very well.
Shortcut to go the River Road, 7B. 7B, okay.
Mark, you need to mute.
Sorry.
It's okay.
I'm trying to get to you, Stephen.
I just dropped a link in the chat. I've been following someone named Adam Tooze, his Substack, and I've just become a huge fan. It's a $5 subscription each month. He's an economist at Columbia, writes for Foreign Policy and Financial Times, and he puts out this thing called Chartbook, and he releases it nearly every day or every other day. And it's just a nice survey of geopolitical issues from an economic perspective. So I've become a huge fan. It's making me smarter.
Yeah. I think there's another interesting byline that came up. There's significant amount of Chinese investments into US education and universities. Was the kind of consequence of this new order that is evolving, and would we see some of these endowments and funding get out of the US universities? And that's on one side. The other side is whether China is using a backdoor in terms of gaining access to US technologies in the event of a war, and whether they have found a way using this forum. So these are the topics, but there was no kind of, everybody is in their own kind of corner, and all these issues get raised, but these are issues that is very clear, is very topical in the minds of these leaders and people. Mark, do I go to the next topic, or can we wrap up? I'm already at 8:51, 31 minutes past my time.
You're on mute again, Mark.
It's tough doing this in transit.
Mhm.
I'm inclined to say let's wrap it up. If you have a last point or you want to make, Sridhar.
No, my final point is I'll conclude, which is namely the other big topic on the agenda was climate change, whether countries are committed to climate, because this could be a consequence. One question that came up was Asia Development Bank has been funding some of the looming coal mines and coal projects. So how does it kind of intersect with ADB's ambition to the climate talks? And I think they clarified by saying that typically the life of these coal plants is 30, 35 years. They are giving money to make sure that these plants have a gestation of life after 15 years. And the gap in funding for the NPV for the investors is what ADB is funding as an incentive for the winding down of these coal plants in 15 years to meet the immediate kind of necessities. So this is the other topic. And I conclude with that. There's a big topic on AI, but we don't have the time.